Hi there, I'm Julie Tam, managing broker at LYN Realty in Houston, Texas, and thank you so much for watching my weekly Wednesday video series, Smarter Real Estate. Today, I'm actually at the beach, Galveston Beach, specifically East Beach, and I've got some information I want to share with you today. This is a little bit of a different setting, a little more fun, a little more relaxed for a serious topic though, and that is the difference between FHA and conventional loans when you're looking to buy a home. And some of the new things about FHA loans that you may not know that actually help a lot of people and make it easier for you to get one and also avoid paying some of those fees that used to come along with them. So come along with me for a nice walk along the beach and talking about mortgages, home mortgages. All right. So first of all, I've got four kind of main things that set FHA and conventional apart. So most of y'all, when you hear those terms, may know that FHA stands for the Federal Housing Administration, which is a government agency, and so it's a government-backed loan, which is different from a conventional loan, which is a Fannie Mae or Freddie Mac a conforming loan that is given out by a private lender. A bank, a mortgage broker, for example, could get sources for you to lend. And so those are kind of the overview differences, but let me drill down to some of the details. First of all, the conventional loan usually requires a higher credit score and a higher down payment. And an FHA loan, obviously, you can get it more easily if you have a lower credit score, so it helps people out who may not qualify for a conventional loan. So that's the second main thing. And of course, the lower down payment means you don't have to bring as much money to closing, so then you can go ahead and buy a home earlier in life, potentially. Third thing I want to talk about is higher debt to income ratio that is allowed under an FHA loan. So a higher DTI. What does debt to income mean? Well, basically when the lender is looking at your finances and your credit report and all the different other sources of debt that you have, because taking on a mortgage is taking on new debt, they want to make sure that all the student loans you have to pay off, your credit card debt, if you have any other mortgages, car loans, etc., do not add up to more than 50% of your income. And the fourth and final thing is that with an FHA loan, mortgage insurance is always required. It's a monthly fee that you pay. You don't get it back. It doesn't add to equity to your home. And basically, it's kind of like throwing money away in essence. So if you're able to get a conventional loan, then you don't have to pay mortgage insurance, unless you're putting less than 20% down. Then you have to pay it until you build up enough equity for the 20%. Okay, so let's dive into 5 FHA loan facts. And I've got my trusty notes here. These are some of the newer things that you may not be aware of, and I'm going to source the Texas Association of Realtors for this data. So FHA loans are now available for individual condos. It used to be that the entire condo building had to be approved for an FHA loan. So you could go onto a website and actually find a list of condos, and you could search condo buildings to see if the name of that building is on the list. So a condo building would be like Palisade Palms behind me. And now, though, it makes it easier because your individual condo could qualify for an FHA loan. This was an advent from October 2019 that brought about this change. And so the buyer's lender would still need to file paperwork, though, with the FHA showing that the development meets basic FHA standards. All right. So an FHA 203K loan can be used for fixer-uppers. So if you are looking for a home that needs some renovations, needs some TLC, you can actually roll it into the total mortgage amount. Now, the property is going to be undergoing 2 appraisals. Normally, if a home is already in the state you're going to buy it in, you get an appraisal on it in its current state. Well, the appraisal will be done on the as-is condition for the home, but also for what the hypothetical condition would be after the renovations are done, after you close on the home purchase and actually get those renovations going. All right, the third thing is that gift money can actually be used as part of the down payment on an FHA loan. So if you have a parent or some other, wealthy relative or friend or whoever wants to give you some money toward your down payment, that is actually possible. But the donor will have to provide a letter that's signed and dated by the donor and also the borrower with the gift giver's contact information, their relationship to the buyer, and also, of course, the amount of the gift, and a statement saying that no repayment is required. So it's a gift and that's it, because the lender wants to know, is this a gift that you're going to just have and not have to worry about, repaying or paying any sort of interest or fees on, because otherwise that obviously brings about increased debt for you to get that loan. Okay, the fourth thing, am I on number 4 now? Yes. FHA mortgage insurance can go away after 11 years if you put 10% down at least. Okay, and the final thing, the fifth thing, is that debt to income ratios for FHA loans can be up to 50%. So you can have 50% of your income be the amount of the debt that you are repaying, or having to repay on a regular basis. Now, one thing I do want to note is that it does require a credit score above 580 to be able to have DTI up to 50%. And some compensating factors include verified cash reserves or additional income not already factored into the ratio. Okay, I'm not a lender, so I want to make that very clear. I'm a real estate broker. However, we know some of the basics, or at least I do, to lending. But if you have any specific questions about lending that I cannot answer, I can definitely refer you to some of our lending partners who can, and they're going to be the ones who have the expertise and are actually in the industry. But I do thank you for watching, and if you have any questions for me, please comment or send me a message. If you have any ideas for a future episode, please let me know. If you have questions about anything real estate related, let me know. If you're not sure if it's real estate related, let me know, and I will reply to you and give you some sort of answer or direct you to the right place to get the answer from the correct expert on that subject. So please do tune in and continue to follow, subscribe, and watch on Facebook and YouTube my Smarter Real Estate Weekly Wednesday video series this week without makeup and hair blowing in the wind from East Beach in Galveston, which is on the Gulf Coast, right on the outskirts of Houston. Thank you so much. Have a great week. Hope you are enjoying the view as much as I am. Bye-bye.